Please welcome Martin Krung. He's a Swiss crypto native for over the past 12 years. He's a full stack developer with a background in art, software, and innovation engineering. And most importantly, this is the key part, he is a key Curve finance contributor when it comes to business development for the Decentralized exchange. So, Martin and I have been talking via Telegram. I am excited to be chatting with him here on the podcast. Thanks for making time. For those who don't know what Curve is and why you say on LinkedIn that it is the best decentralized exchange or DEX, what's your quick elevator pitch for Curve?
Yeah, Gareth has like the best technology for non-managed liquidity, basically, because it's able to. You don't have to manage liquidity. You just submit it to your AMM, and then it has liquidity itself, and it's not like others do who have like managed positions now. So you never have to manage your position, basically. And the main we have like different products, but the best technology we have is like for established assets, basically. So if you
Yeah,
pair
like
like
kind.
stable coins or like ETH, liquid staking ETH, then yeah,
Staked
it's
ETH.
like the best technology out there, basically. That's
Yeah.
only one part of our like products. Yeah, basically, it's like the first one we made,
No.
basically.
Yeah. Well, I know we're going to get into Llama Lend and CRV USD, the stable coin, later on in the podcast. Let me ask you something before we get to that. So, why is it that if you're a liquidity provider, you default to Uniswap as opposed to Curve? Like, why is it that not that you default? That's the wrong way to phrase it, but basically, um, it is there a financial incentive for people who manage money on chain? If you are like a Van Eck or a crypto hedge fund in some form or fashion, is it do they make money if they do they get to charge a management fee or some is there some benefit to why they would park their excess liquidity or cash in a place like Uniswap as opposed to Curve?
Uh, now we lost a little bit. You think, yeah, that's not how I viewed at this, because I'm more like a retail. I'm more coming from retail, basically. So I think the benefit is that you don't have to manage your liquidity, basically. That's the main benefit. And it's
Yeah.
hard to manage liquidity right. If you see the adoption from V3, Uniswap V3, it's not that high because people still open Uniswap V2 pools because yeah, you have to manage your positions all the time, basically. And that's it's for pros. So that's not the answer to your question, but
I get it.
for if you look more from the institutional side, yeah, I think it's the same at the end. It's the same because what we see now, there are a lot of applications built on managing liquidity positions, basically, and they all take a cut. So even if they're more or less successful, some of them are more, some less, they add complexity to the product, basically, but they also extract value. So you have to pay them in a form, basically. So
Yep.
this is like it's a complex in top, and it's a competition out there who has like the best like liquidity management system for Uniswap V3, basically. And yeah, it's like endless competition, basically. And you
Yep.
don't have to do it with Curve, so it's much more simpler to use and also to it's also if you look at mainnet, if you have to rebalance your position on Uniswap V3, you produce every time you need like yeah you pay for the rebalancing, and that's not the case with Curve, basically. So that's
Yeah. So how did you get involved with Curve? Like, what is your I kind of skipped right over this because we started talking about liquidity
yeah.
providing on these different dexes. But like, yeah, what is your trajectory in terms of how you got into this business development role
I've
for
been
Curve?
a very early like Ethereum user, so I had
Yep.
like a multi-stacker, so I had like cash on chain, and I had like to deploy it, basically. It couldn't be idle, so I just tried out every product who was upcoming in the DeFi world, basically, very early on. So it's like I've been an early liquidity provider to Curve, so I got like the airdrop, and then since then I was always like some kind of Curve guy, basically, because yeah, it's like there's a good technology. I also got like Uniswap airdrop, but it's not the same. Uniswap, the token itself, it's like, yeah, okay, it's like nothing
What can you
happened with
do
the
with
token.
it? Yeah.
And Curve is like very different. The token is like a very deep part of our product suite basically. And it's also like, yeah, it's a token who is it has many properties basically, but it's like, yeah, it makes sense, and it's mostly used to like adjust the system, and you get fees, too. So it's like a
Hmm.
government store, but we are not like a government. We are not a DAO who does government on like on yeah, I call it, we are like a parameter DAO basically. We vote on params, and I think that's fine. It's just that mostly it's writing on parameters on the protocol. It's not about coordination, who is like making what kind of contributions, or like payment of contributors. So it's like, yeah, we are param DAO basically, and I think this
Yeah.
this is like a good thing to be basically. It-
Yeah.
and it works. So
Yeah. There's a ring fence in a way around the Dower. It's limited in scope in terms of its
yes, yes, yes.
decisions.
Yeah. And so I was like really proud. I was like playing around with all these protocols, and so I got like a curve. I was like a curve guy because I got the airdrop basically. It makes loyal, if you like the product and use it early on, then you identify with the with the product basically. And it also locking up part works too. I've locked them up as V curve because at this time you couldn't do like different. Yeah, there was like no derivatives of curve, so it makes loyal too because then you have the token locked up for 4 years, and then yeah, your long term incentive to help or to look what's going on is high basically.
Yeah.
But then I have a
Yeah.
history with all that. So I got like I was like a hobbyist like for 10 years, and then during the pandemic, coincidentally, I left my former company, and then I worked like for different hours, and then yeah, ended up with GovDAO right now.
But you're also involved with Aladdin Dower, is that right?
No, yeah, I've been one of the first contributors to Aladdin DAO. I'm not anymore with them. It's just that
Okay.
Aladdin DAO had like in the past they had a very different like idea to make a product, and I tried to help at this time, and then yeah, it didn't work out the idea we had, or this time the idea didn't work, but like the founders they just yeah made a pivot basically, and at this point I was like I would say you have a certain energy to start new things, and at this point I was like yeah the energy was not there anymore, so I left and was looking for different things, but I'm still very curious what they do, and yeah, connected somehow.
Hmm. Okay. And do you in your role for BD for Curve, are you going to conferences? And the reason I ask is because I know a fair number of people who work at centralized exchanges have big budgets, go out for nice meals, throw parties under the auspices of business development, right? And I don't necessarily, well, I don't know you, but I don't see you doing that. Let's say on behalf of Curve.
No, Curve has like a history of not showing up anywhere, basically, I
Yeah.
guess. And it's okay. So yeah, I think it's also about we have like product market fit, and I just have been to the Ethereum Zurich conference like last 2 days, and I didn't attend a lot of conference last yeah in my life basically, and somehow what you see, yeah, some have to show up because it's like they have to sell a product basically. They don't have users, so they have to go there and say, yeah, that's me, that's my project, that's what you're doing. But Curve is like in a way it's different. We found product market fit, and we we try to, in a way, for me, business development for Curve means we talk to other protocols and try to help them to integrate us or how they can use us basically. Also like to project who have token or stable coins, we help them and yeah, advise them how they should best use Curve basically. So it's much more business to business in a way. It's not that we sell curve to retail because most of the traffic is anyway over aggregator basically.
Yeah. So let's go on that because I'm curious when if the yeah, if the volume or the traffic is coming from aggregators, and when we say aggregators, we mean somebody like Matcha, CowSwap. What are yeah, like 1inch? I assume they hook into like an API in the back end of Curve, or how does an aggregator get tied in with Curve, or how does Curve get tied in with one of these aggregators?
Yeah, I'm not too informed about the deep technical details, but basically, we have like some how they call registry where things show up, and of course
Okay.
they can auto discover. It's differently done. It depends also on the technology they use. You know, some of them are like integrating them in yeah, they just see them pop up and integrate them. There the issue is in a way is more if we iterate on the model and we do, you know, from outside looks like every pool is like, yeah, it's like a stable swap, but we have different versions of stable swap out there. And then it changed also internally how you can calculate the best rate or how what aggregators try to do. They try to find out how the trade will be executed if it's executed. You know what's the price basically. So they need pretty good model and how to calculate the price. And if you change a little bit, then this also change. So they need to yeah, write adapters or we help them to write adapters that they can like see what's going on basically. That's
Yeah.
the
Yeah.
short.
Sorry, I had seen, I think on Curve's Twitter several times of requesting some of these aggregators to change which contracts or which pools they were referencing because when Curve would iterate and release something new, the aggregators would still be hitting, yeah,
Yeah,
like
yeah,
either interfacing with old contracts or hitting old pools, and actually Curve was losing volume relative to other dexes because these guys were using kind of old tech. Let's say, is that right?
yeah, yeah.
Yeah.
This, or I think that's like, you know, under the hood, Curve is like a complex beast and things changing. And so I guess it's for every project who's like evolving the case that sometimes aggregator have like old information, use old information, or maybe even not are like incentivized to integrate you. I don't know, you know, on some layer twos, Curve is there, but we don't have like a lot of TVL. So it's like, I don't, that's like not my expertise basically, but we work on this and we like we maybe like last 3 weeks we check things and see which pool are included in which kind of aggregators and yeah. And it's also, you know, this is one part. The other part is that you also need like arbitrageurs to, and this is more like now the soft liquidation part of lending markets because this is done over arbitrage basically. And this is like another market where we yeah, do work like in the background basically. And that's not
Okay.
very visible. So
Yeah. Can you explain that? And what I mean, why does Curve need the arbitrage bots to enable or to substantiate the soft liquidation mechanism that's in Llama with two L's? Like,
yeah, yeah.
how does that
The
work,
thing
and why
is,
is it important? Yeah.
yeah, okay, now it's got, maybe I have to explain a few things about, you know, the soft liquidation mechanism, in a way, you can look at this, it's used in Curve USD. So you, if you have a collateral and you mean Curve USD, you can set your own like risk factor basically. You can give your collateral and then you can choose which is like the top and you get into soft liquidated and what's the lower bound you get into soft liquidation. So you have a range basically. And what you then do, it's like the liquidity is then like, it's like in bands. It's like, it's similar to Uniswap V3. There are like some bands where then all the liquidity is like in like place basically. And it works like a stop loss order. So this means if the price that you have a price feed and if the price feed is going down, then this bands like triggered or like open up for a trade basically.
Hmm.
So people can then, or arbitrators what they do because you have to collateral like ETH in it and you draw like Curve USD. Now the ETH price is going down. So what soft liquidation does, it sells one position who is on the water basically, this position is sold to Curve USD. So your collateral is slowly sold to the Curve USD you lend out basically, but it's still owned by the you don't get it. It's still like your position is slowly changing. It's selling your ETH to Curve USD internally basically, and
Yeah.
this basically it starts backing it by itself. So
Let me let
and
me let,
sorry,
let me sorry. Let me say one
yeah,
thing on that real quick. So I'm a
it's
user. I have wrapped Bitcoin WBTC. I come to Curve. There's a mint cap on there of, let's say, 200 million. I don't have it in front of me at the moment, but that's the maximum amount of. I want to say this correctly. That's the maximum amount of CRV USD that can be minted against that collateral, if I understand.
yes, yeah,
Yeah. Okay. So I pledge my wrapped BTC as collateral. I take out a loan against it in CRV USD. Now that wrapped BTC sits as collateral in these bands that you're describing. And
in a
so
way,
sorry.
yes,
Yeah. And so when BTC or wrap BTC drops in price, Curve in the background goes and sells that band into a liquidity pool that's also on Curve. What is that liquidity pool? Is it CRV USD WBTC, or what is the
yeah.
pool that sells it into?
It's not like directly connected there where the arbitrageurs come in because it's like not that it flows directly to the other pool. The thing is, it's a system where we say, it's always with like blockchain. Yeah, somebody has to make the trade basically. So we say now, okay, it's underwater, so the position is like sold, and there's a discount on it. So somebody is like the arbitrager can then buy the position basically buys the WBTC and sells it on the open market. And no, sends Curve USD and then gets the WBTC and then sells it on the open market, basically like this. So
Hmm.
it's not you can use it's not that you have to use like the other our pools. You could just sell the WBTC to any place who takes it basically. But you need to pay in Curve USD. So it makes
Which
sense, yeah, so it makes sense to use the AMM if there you get the best price, but it's possible that all venues on chain you get the better price for your WBTC, and then you switch to another stablecoin, then buy Curve USD, and yeah, that's
because
so
you have to buy the collateral in Curve USD. It
yes,
creates a demand side for
yes,
CRV USD as well,
yeah,
right? Yeah.
yeah, exactly. So this
Interesting.
is like it's like a pool who is like it's also a pool who has the liquidity in it, and then it's like arbitraged away. So then you are like if the price is going down, then you are in a soft liquidation position, but then it deliquidates. So if the other way around the price going up, then the thing in the other directions happens basically. So you buy back WBTC with Curve USD, or not you. Your position is arced back basically, and you lose part of this is like yeah you have to pay for it in the form that the publisher has to pay the gas and it needs to be incentivized to do it. So you lose a little bit of your collateral basically. So it's not.
Yeah.
And then at the end, if you really go, all the bands are sold, then there's like a hard liquidation. Then your collateral is really gone. But we didn't see many hard liquidations because we are like in an up market, so it works quite well. You see positions going into soft liquidation, then recover from it, and then then however it is, you can draw then more, or you can change what you want to do at this point. So it's like
And
it works quite well. There are a lot of soft liquidation, hard liquidation. Most are soft liquidation, and the price recovers.
I think what's interesting to me that you said is that the protocol Curve at the end of the day, like, it has its loan of CRV USD repaid. So like whether it's an arbitrage bot or some other mechanism, it is repaid. Like every time you're going through these different bands, Curve as a protocol is getting CRV USD. It's like it's not getting paid in USDT, USDC, anything else. It's getting paid in CRV USD, so that at the end of the day, its loan book is healthy and that like you can't take out an it has to be an over collateralized loan. You can, like the protocol, the risk, I think, to curve in making these loans, if you want to talk about peg keepers as well, we can get into that. But like, is the value of CRV-USD drops below $1, or that it breaks peg, because that's that's the
Yeah,
second part. Like it can
yeah,
get
that's the
paid back in
second part.
CRV-USD. Yeah, sorry, go ahead.
Yeah, now you talk about how we stabilize the
The peg.
yeah, the peg for curve USD basically.
Yeah.
This
So
like yeah, it's just to close that we now use the same mechanism is now used also in the lending markets. The
but
soft liquidation mechanism is also used in the lending markets. It's just the same mechanism we use on curve USD is also used in the lending markets, the curve lending market basically. And I think it's a very good product basically. It's like yeah, people yeah, nobody wants to get liquidate basically. So it's like you have more time to react. That's one side. You can look at this. You have more time to react, but you also can like set your. You can go quite close to the price who is there now, and just say on the assumption you say if you will want drop below 2,000 US dollar, you set your band this deep, and then you don't have to worry. Except okay, yeah, if like the market turns completely, then maybe you have a problem then. But in a way, in the cyclic market, crypto normally behaves. So it's quite, yeah, it's a good product for sure. And upcoming, the price going up and going down, yeah, we will see. It's just it's
and
like we just started in the bear market basically, and now we will see if it's performed, if price come down in the cycle down later. But that's not the
so,
issue. It's not the issue of performance. It just mean performance mean how people use it or how good it is like for the average user basically.
got it. Yeah.
It stabilizes itself. So this is also maybe if you want to talk about curve USD, this like yeah, it stabilizes itself because it's like the demand or its price. So the fee on the minting curve USD, the fee we take is depending on the price of curve USD basically. So if there's like an overpack, then we're going to raise so there's like too much supply basically.
mhm.
Then to make it like I always switch it in the wrong direction. So
Yeah,
if there's
go
an
ahead.
overpack, it's like it's too confused. It's like there's
It's above
too much
peg.
demand, because people want to have more curve USD. And
Yeah.
then the fee is adjusted, and the fee is adjusted on curve USD is adjusted um, downwards. Yeah. No, I'm not sure. Sorry. I always it's strange. It's very simple basically, but I can just never have it in my mind. It's like this.
Well, I think the beauty of it. Well, I think the beauty of it from the outside looking in is namely that the mousetrap is such that the interest rates that are charged on the loan are dictated by demand for that particular. I think it's demand by for that asset. Like if you're pledging WBTC, or if you pledge staked ETH, ST, ETH, you have different interest rates on a collateral by collateral basis. From what I saw, no, that's incorrect.
Yeah, but this is very. I don't know how the how they are. No, it shouldn't be. They should have the same more or less basically, because it's just what we do now. If we make if fees are going up, people are incentivized to buy back curve USD basically. So yeah, now I got it. If it's an underpack, then we do this. If the price going down and curve USD is getting too cheap basically, then the rate's going up
Okay,
on curve USD on collateral basically. Because then you're incentivized to buy back curve USD. Curve USD is like
and
cheap, it's under $1. So you buy it back and pay back your loan. This is the mechanism. And all the way around, if there's an upback, then we generate, and there's the peg keeper comes into play. Then we generate like curve USD, inject it injected into the pack keepers. In a way, we're like minting like Curve USD, like I always say like it's like unbacked, but it's not unbacked. It's not really unbacked. If you look at the size of the collateral Curve USD has, all the BTC and all the things that you add, if you add it up, it's not unbacked, but it's in the sense unbacked that we open up a buffer and fill it with Curve USD, and this Curve USD is just generated from the protocol basically, and it fills into the pools, and then if because we add Curve USD on one side and the Curve USD has like is overpacked to like USDT as an example, you inject more Curve USD, so you come back into balance, and the price goes down of Curve USD. It goes down of Curve USD. Basically, that's the basic.
Relative to the USDT. Yeah.
Yeah, exactly.
Yeah.
And the
Okay.
adjustment, the beauty of this system is in a way that on shrinking supply, the yield on your collateral is going up. It's like, so if the supply shrinks, you have an underpack, then the yield of the supply is going up. So we make more money, strangely, if the supply is sinking. We earn more fee on the supply is shrinking, because then we have raised the rate to people getting by like the supply and pay back the debt basically. And this is like the twist. This is like Michael's idea basically. It's like very different that normal economic system works. In normal economic system, if you have like inflation, what do you then do? You raise the rate.
To try to make the money more expensive, let's
Yeah, to
say.
trade the
Yeah.
money more expensive. And this is like it's like yeah, how it's like switched basically. So it's very
Yeah.
interesting to see. Of course, we try to grow. So rate is going up. If we grow fast, rate is going down. If the supply of Curve USD is growing fast, rate is going down basically a little bit. Maybe you don't see it, because like the market cycle itself plays into this too. Now it's just everyone wants to go long, so there's a lot of demand basically. But in theory, so if there's a lot of demand, then the rate is going down. Sounds strange, but that's okay. So we will see if we are able to grow a lot. We will see how then, if you go in a scenario where the market shrinks again, we will see how much fee we then print. But the interesting side of this is like anti-cyclical in a way. So it's possible that we make a lot of fees if we go in a bear market, basically, because then there's less in demand. We have to make we have to keep the fees we take high on the collateral to pressure out basically
The
the
peg.
incentivize people to buy coffee from the market and pay back
Yeah.
their.
Keep their loan healthy.
So it's like, this is like, I think that's it's a very smart system basically, because it's like long term. It's not just everything Curve does like long term. We don't like we don't like that's like glue into the Curve. It's also glued into tokenomics, because if you look at tokenomics, there's this halvening of Curve, and
Just like the
no, it's
Bitcoin
not
halvening.
It's halvening.
Yeah.
It's like once a year the supply is like going down, and it's also like quite long term basically.
Yeah.
And maybe
I think it's a
see.
300-year mint cycle or something. It's
Yeah,
like,
yeah, yeah.
it's a pretty far out.
Yeah, you want to talk
Sorry.
now? We talk really about the technology or like how Curve works, but you had like other topics
Yeah.
to bring.
Yeah.
So it's not
There's one thing I did want to say on what you were saying earlier. So I watched Michael on, I think it was the Unstable Summit. He was being interviewed. For those listening, we're talking about Michael Igorov, who's the founder of Curve Finance, and the interviewer was asking him about Curve USD and these rates, and he said what happens in the traditional finance sector is you have the borrow rate that the Federal Reserve dictates down to the member banks. And he said, in this lending market, instead, what happens is you have actually like the lending rate that these banks demand of Curve. So it's like it actually goes in like up. It goes up, for lack of a better way. It's not that Curve Finance is the Fed. It's more that like the market is setting the rate at which it will borrow from Curve the CRV USD with respect to these different collateral types, basically, or like assets. And whereas if it's the Federal Reserve, they say to the member banks, you need to raise, or how do they dictate? They set the federal funds rate like from a top down perspective. So he had flipped
Yes.
it, and it
Mm,
was a
yeah.
yeah, yeah, and it so again, it like introduces market forces to allow that interest rate to actually be set at a natural, or let's say an equilibrium.
Yeah.
And yeah,
Exactly.
okay. Anyways, we can nerd out, shift to something that
Yeah,
yeah,
it's interesting. Yeah, it's very interesting to. Yeah, this is one of his intentions. Basically, it's not seen by many people,
yeah,
in a way, because
yeah,
many think, yeah, it's just about, yeah, milk curve USD and then speculate on curve USD or whatever you do with it or go along. But behind there's a
yeah,
bigger
yeah.
experiment base.
Well, when you and I spoke before the podcast, like I have always kind of marveled at Curve's penchant for game theory in terms of figuring out how to get people's incentives into alignment. I mean, VE CRV is an example of that. Convex is an example of that. A lot of it is game theory, deep game theory, in terms of trying to figure out how do you convince and not coerce, like legitimately convince somebody to take the outcome or take the action you would like them to take because it's in their own best interest. But it's a lot of different competitive parties, and you're trying to bring them into a marketplace and have it be relatively harmonious. And when I say the marketplace, I mean, the market for Curve as a token CRV. And then out of that comes things like governance, things like cash flow, things like gauge weights and voting and yeah. So, anyways, let's shift briefly on this and go. Do you want to talk about VE Curve as a governance model and some of the changes that have taken place following the launch of Curve, as you've seen it in the ecosystem in general?
Which changed? We didn't change anything, basically.
No, 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 no,
Maybe I
no,
don't
no,
know
no,
about
no.
big up. It's
No,
still the same. No, it's like it's
no,
like
I mean these iterations, the solidly forks or the like aerodrome or velodrome or pancake swap has now adopted a VE cake.
you mean the tokenomic model that it's many times copied, basically.
Yes, yeah, yeah.
Yeah,
Because Curve was in my opinion, the pioneer of this, and now, like a lot of things in DeFi, it gets copied very quickly and iterated on.
yeah, yeah,
And
yeah, yeah. Curve is
yeah,
clearly the pioneer. But I don't. The funny thing is, that's like my personal opinion. I don't know. I didn't never ask Michael. I think it's not even. I'm not sure if it's really done on purpose. Maybe it's just coincident because in a way, one issue it solves the token, the naked token. If you trade the naked token curve, there's no revenue share in curve token, but only on V curve, and it solves like an issue that so only untransferable V curve is like a security in a way because there's a dividend on top. But V curve itself, it's like it hasn't governance right. There's no yeah, you don't earn fee on it. So it's a very elegant solution to this problem basically. So I guess
game
that's one of
theory,
the drivers in behind. Not about okay how and other things. Of course, then if you think in this direction, how can I make a token who doesn't have this property, and then you come to this solution. Then you see okay there are many other properties who's like beneficial of this because people who are like more aligned with your value or with your vision, they are ready to lock it up for 4 years. Else they just won't. So, and you give them like governance right, and you give them like revenues basically, and others don't get revenue. but it solves like an issue who is like really, yeah, it's an issue. You make a token, then it has all these characteristics, then you need legal, blah, blah. If you do it like this, I don't know the legal standpoint to be curved, but at the end, it's like
It sidesteps it.
it changed it changed the token in a way.
Yeah,
And of
yeah, what
course, resulting is the long-term incentive who's like, yeah, you like that too. So it's like beneficial on several layers, basically.
yeah,
So
it's sorry, it's game theory twice in two different instances. One with VE curve versus CRV, and also with CRV versus other stable coins, because a lot of the attack vectors for stablecoins is this is a bank, they have taken deposits, whether it's Tether, Circle, and now they have issued this almost like a deposit receipt on chain. And Curve says, well, what's to me, I'm paraphrasing, but Curve says, okay, cool. Like what's the important part of the stablecoin, which is you actually want to know that that is useful as a unit of measure or a transfer of value, and not that like okay, cool, they took other assets, WBTC, staked ETH, other things that there's no bank that's like going to say, okay, cool. It's like a way to get it's you get to the stable coin without necessarily needing to compete head on with like a tether or a circle, and then and need to swim in those regulatory waters. Let's say, I don't
yeah,
know how to
yeah,
put it. You know what I mean?
yeah, yeah. For me, this is like a side effect, basically. For me, it's much more that if you look at money or what money is, or you know, so if you make a stable coin, any stable coin, how do you get it adopted, basically? And there's like maybe I guess there's like strangely there's like another stage in crypto which I call like is a mean of speculation. So in crypto you can have a stablecoin and just to purely speculate on it. It's like cash with like speculative properties. And every new stablecoin, or most of them, if it's not fully back, goes to this stage of yeah, people just buy it to farm other tokens or your token, your project token. I guess
Hmm.
MK, the Prisma, and it's like perfect example because there you generate the MKUSD call, and then you
Yep.
farm their Prisma token and you sell it on the market. But the question is, at some point, what's going to happen is you lose the speculative part of it. So every that's I think that's different in crypto than in the traditional market. Cash is not a speculative asset, but in crypto clearly is. So this is like the first stage. Everyone makes a new stablecoin, and then it's like the stage of a speculative asset. Everyone uses it to farm and make money with it, and that's completely fine because that's how you get like people interested in your project. But then you go to the second stage of money or quality of money. Then you say it's like a mean of exchange. So you have like the dollar is like the best mean of exchange. This is why it's so adopted basically. So and this is like if you are like a DEX like us, then um, we an exchange. So if we own our own dollar, we can make it the best mean of exchange in our exchange, basically. And then it gets a property who's like, yeah, it's not only the value, it has I don't it has a premium on top, basically it's usability, basically.
Yep.
And
Yeah.
then the
Yeah.
next stage, you want to be a store of value. That's like the end goal. That's what like some currency are store value, like the best store of value. I live in Switzerland. Swiss francs one of the best store of value you can have. It's better than the even as like the US dollar basically. So this is the property you want to have. But the strange thing is, you think about property store of value. You can't force it. I would say, okay, the US maybe can force the dominance to the world, but you can't force it on money. It's about the quality of the money or the quality of the stablecoin. In our thing, Mitch told me once, yeah, for me, the quality is in the pack. If it's very stable, the stablest, in this vision, the stablest collateralized dollar is like very close to pack. This measures the quality of this dollar basically. So
Hmm.
it's a quality sign. It's the best store of value. Maybe is the one who can really keep the peg very close. Maybe if some people maybe think in this direction. For me, it's much more okay. You make a trade and you use Curve USD and you buy some assets. Where is the point where you say now I just hold Curve USD without going to like another stablecoin who's fully backed or so, and you achieve this by giving Curve USD the property that it can be used, and you can use it and buy other tokens or other stablecoins if you need it. So you get some kind of reserve asset. And I guess Curve is like in a unique position because we are an AMM, we have now Curve USD, and if you see, we clearly tried to open many pools with Curve USD basically, because that's our blood. So, and we make money on this too. If Curve USD is adopted, we make more fees. We make more fees on Curve USD than on trading fees. Guess
Right
since
now.
quite some
Yeah.
time, basically.
Yeah.
This is also the reason why you want to say the next goal you want to achieve is like you want to slow down your stablecoin. You don't want that everyone can just basically just throw it on the market in a way. And this is like soft liquidation is like the perfect place to do it because in a soft liquidation mode you're kind of it's like stuck basically. So it's
Hmm.
not so and then, even if you're not stuck, it's just slowed down. The velocity of the curve you still slowed down, and I think this is like it's important because blockchains are very quick systems. It's very fast basically, and sometimes you see shocks. And if you see shocks, then it's always about how fast can I get the money out and creating like a bank run situation. People are like in panic and want to go out. And many times the system stabilizes itself after some time. But if the time is very short, and you have a bank run and then you're done basically. So if you achieve to slow down your system by giving additional like properties to basically in our case curve USD, that it can flow out that fast, you stabilizing the system. And the chance is relatively high that if there is an incident, it can be externally, you don't know it can be externally, how whatever happens, you never know. For curve, it's in a case, things can happen. You also on the government side, maybe if you give governments fight, and you have like problem, you're not able to act anymore, and then you have like crisis, and if then people are able to make the system fast, your chance of collapsing, getting damaged is higher. So it's good
Hmm.
if you are able to slow the velocity down of your curve or your like basic fast curve USD. It's not that we want to lock in people and not giving back their money, but one of the ideas is that you slow it down because then it's stuck basically in different places and then it doesn't flow out so fast. So it stabilizes itself. So that's the one of the ideas that if there's a shock, then things happen. But I experienced it many times. If I like on the circle DPEG on the weekend, I was panicking too. Afterwards you always have to think, why have I been so stupid? I didn't lose money. I didn't lose money basically, but maybe a little bit. But I also traded on this weekend. I was affected by this, even if I know that if you think about circle, it can, it's like it's a serious business, I guess, nobody knows the
Yeah.
background, so on. But it's a high quality business. So the idea that it really just poof goes away, it's like, it's irrational basically. But this weekend, everyone panicked, me, I panicked too. And like, so, and then in the Monday, it was like over and then it repacked. But it shows exactly what's happened sometime is that people go just in panic mode and it's some kind of collective,
Psychosis. Like it's like a yeah.
psychosis in a way.
It's like a madness of the crowds. Yeah.
Yeah. And if you get hit by this, and some protocols have been hit in the past by this, or we will see in the future protocols who get like hit by this, even if you have like would say a protocol or like a product who works well, you have problems. You have
So
reputation damage and all that basically.
yeah.
So it's like,
But I also think that with the soft liquidations, which is the fact that the protocol, in this case Curve, doesn't have to go out and market sell the assets to be able, like, and like market dump them, let's say, in order to be able to cover the required collateral to make the loan whole, is also helps slow down in a different way this sort of like
yeah, yes,
cascading liquidations, right?
yeah, yeah,
Yeah,
exactly.
it stops a bear, well, it stops a bank run in a mathematical, or at least in a like a logical or a levered way, you know.
At some point, yeah, I agree, but there's like, that's true. It just soften it basically. Yeah.
Yeah, yeah, but it's important because if that if wrapped Bitcoin was gold and all the central banks went out and said we need to sell our gold all at once, and they were all selling at the same price, like that market can dry up or go to zero. Like there's no buyers, or the buyer pool is so limited that they just can't handle the demand of the sell side. But anyways,
Mm.
we're super in the weeds. Let me shift and just go.
Yeah.
Okay, cool. So like one of
Okay.
the things on Curve that's being discussed, you and I talked about before the call, is shifting the fee token that's paid to VE Curve holders to CRV USD and away from 3 Curve. Why would that be done, or what's the benefit to doing that?
Yeah, it's also one thing. It makes sense because it's our own. It just makes sense. It's our own US dollar. Why should we give this like as a fee? This like the first thing. Secondly, it's another supply thing basically. Because I don't know. I didn't withdraw my fees since like half a year maybe. On week of locked up I have. It's not a lot, so I don't do it. Just sitting there basically. So that's another supply thing. And
Hmm.
the other thing is that I'm not sure right now, but I guess Curve USD is mostly, if you look at all the pools, maybe it's the most easy token to use to sell to other paired collaterals, basically. So if we say every token we have has also like a Curve USD pool, or most of them, it's also from the selling, converting to, it's like an easier place to do, basically, because then you can do it like internally. But the
What is
other
it?
hand, it's not easy to implement. It's not because how we collect fees is like somehow it's It's not complicated, but fee generation is different on different pools, and we
Mhm.
have to convert this to Curve USD or now to three pools, and we have to change internally things to do this. So this is why it's not like just can just turn it on. Basically, that's why it
Yeah,
takes time.
yeah. Let's explain that just a bit. So let's assume you've got ETH and staked ETH as one pool, and somebody trades from ETH to staked ETH inside of that pool on Curve. They pay the fee token. What would be the fee token in that pool, and then what does Curve do with that fee token to then get it currently into 3 Curve? Like it has to sell that fee token, and like how does it get from?
It's different. I don't know all the details, but there's like, but I know on stable swap, and we take one side of the trade, so you get the naked token basically as a fee. I think it depends on the we get both sides, but it depends on the side of the trade. We take on one side the fees accrued and the other not. So it should be over time accrued on the same value on both sides, basically, more or less. But we have the
Okay.
naked token. Then on other, I think on CryptoSwap, the fee is taken as a liquidity pool token, basically. So you get like share of the
All
liquidity pool.
three. Yeah. Okay.
Yeah,
Yeah.
no, no, not three. It depends. On CryptoSwap, you get the liquidity pool token, so you have the liquidity pool token, which you have to split up then and sell, basically, just one step more needed, basically. But on other pools, on StableSwap, they just, yeah, just you get the naked token and then somehow I think it accrues in the pool and then we can withdraw it to the pool and do conversation or convert it to three pool assets, basically.
And what would back yeah, as opposed to converting it to three CRV or three pool assets
Yeah, yeah,
in order to pay out as a for the fee. What backs that CRV USD? Like if it's you've collected it, it's a fee that needs to be paid out to VECRV. But what backs that CRV USD as a where did it get, how did it come into existence? Like there was no.
yeah. I guess we yeah, we buy them somehow. So
Okay.
you sell, if you sell ETH, example, yeah, we have now this ETH,
Yeah.
and then I don't know how it really works, but in a way it should work that you sell three parts of it as
Yeah.
to DAI, one part to USDC and the other one to USDT, and then you add liquidity to the pool at the end of the process, basically.
Got it. Okay, so it's always
So it's
creating
like,
demand side. Well, it's creating demand side for CRV USD in order to get the
yeah,
token
yeah,
to
it's
then pay it
creating
out
demand.
to
So, yeah, in a way,
yeah,
yes, yeah, that's true. So that's another beneficial point. Yeah, it creates demand side for Curve USD if we would use Curve USD, but now it creates demand side for the free pool,
yeah. Okay, all right,
basically. So it's like,
all right.
so if
And
you,
what?
the thing is more if you collect dust, the issue is more on ETH it's easy, but if you're like a layer two chain and there somebody opens up a quite illiquid token and pairs it to another token which is not very liquid, then yeah, it's not so easy to do it basically because we never can touch the funds. We have to do it decentralized. So it's like
Yeah,
yeah,
but then you've collected fees in two illiquid tokens, and the DAO has
yeah,
to sell
exactly.
both of those illiquid tokens to get them back to a the three curve. Let's say even if it's on a
Yeah,
layer
yeah, yeah,
two. Yeah, yeah,
yeah. It's not a non-brainer. It's like you need like good system behind to able to execute that in a good way, and it needs coordination, and you have to go to mainnet at the end, basically.
yeah. One of the questions I'd asked you the in the lead up to the show was, you know, I framed it as the challenges which Curve has faced in terms of educating the larger DeFi community about its offerings and what Curve, the liquidity providers and CRV bag holders can do to help. Like how does how do you multiply Martin's efforts 100x in the sense of, and let me frame this
Yeah,
in a less esoteric way. So I see I see Curve as a group of very talented engineers, and sort of like the product speaks for itself as far as it being like self-evident that it's good, and it doesn't have like a ton of marketing hype behind it. Actually, like kind of it doesn't want the hype. And so you know it, how does somebody who wants Curve to succeed help it without pissing off or the or violating its core principles of cool, we're like, first and foremost, we are physicists and math wizards, and like we build incredibly good software, and the market will recognize it at some point, like it will get around to it.
yeah. We're just very engineering driven. That's how I name it. So we are very engineering driven in a way. And if you ask, you know, and also like I focus mostly on like talking to other protocols. So the question is, yeah, where is like now you speak about like small investors. Maybe you can
Yeah,
name it.
retail,
How
let's say.
they retail, how can they help us, or what they can do. I think best they can do is sell our technology in a way, if they're able to, you know, in a way, because this means if they see some other projects who try to achieve things which either could be built on Curve or other way, or they could use a good like place for a established asset, or they have established asset, which would be um, benefit from Curves like technology, I guess. And most of these people you described is like they're not like investors, they're like part of the community basically. So they
Good
want to help
fans.
us. So yeah. So I guess this is the yeah, the best way. It's not about,
Yeah.
okay, we are not against like people shilling our protocol or the project itself because we have like good products. But it's not that yeah, I think it's also like, of course, everyone wants to see more value or more recognition of the value in the token or any on curve. But somehow, I guess it's also a little bit to do with the market cycle or how these cycles work. You know, in a way, you're like, yeah, we have old protocol and the how to say we have a good story and we have good product, but there's like the illusions people can have is like
Mhm.
reduced by the
The fact that it's
things.
actually out in the marketplace.
Yeah, in a
So
way, yeah,
yeah,
that's only the one thing. That's the
yeah,
only thing basically. Because we are crypto is a market who is like filled with narratives and stories people tell, communities tell each other this like the story, this like story. And then you have like, yeah, you imagine like this is like the next big thing, and then yeah, you buy the token. And
yeah.
if
You wrote
if
about
it,
this on your
if it
blog.
fits, yeah,
Yeah,
then it's like, yeah, you make money until the story doesn't add up, and then yeah, the price like gone of the token. But
yeah.
it's
That's a
it's
lot
a,
of what.
it's an interesting force, but we are not affected by this anymore in a way. In a way, yeah, we are too serious for this kind of. It's also too. You can also calculate too much things. You know, if you see, I just did check before the talk started how much fees you get on locked curve in stablecoin, and it's like 30%. Like I don't know which time scale, maybe last week. So it's a lot, you know. It's really good share. If you imagine if a share replaces itself in 3 years, you can buy the same amount. So it's like it has like a how do you know, I don't know
It's a good
the term.
investment. Yeah, like
Yeah,
in the
you
TradFi
can
world,
buy
it'd
it
be an
and you can
excellent
buy
investment.
itself, and it's like a three multiplier. You can have it
Yeah,
back. You
three
invested
x
there, the
on.
price now. That's crazy low. You know, evaluation is really crazy low, basically. And it's yeah, but you see, you know, but it's just my perspective. Also, you have also limited amount of money to deploy. Also myself, you know, I'm part of this market too. So if you have like stablecoin, you want to invest, should you invest in something who maybe gives you like a fivefold or twofold in the next year, or should you like invest and Curve can token maybe I guess it will make this jump too, but then, if you think it is cash flow assets, then you maybe think, okay, yeah, I buy it as the regulated asset. It's better maybe because maybe it makes a 5x. And I think it's very possible that Curve makes a 5x and two, but it's just another thinking, you know. This is why if you have a cash flow, then people look much closer at this as like a stock or bond, basically.
Yeah, but they apply traditional like a
Yeah,
traditional financial valuation or like they understand like there's a certain amount of cash flow, so therefore using discounted cash flow modeling I should be able to
yeah,
project the what this asset's worth to me. But whereas with my meme coin, it's the sky's the limit, and there is it's strictly narrative based, and there's no there's nobody who can disagree with what I think it's worth as a meme coin or as a like some of the tokens that just launched, because nobody can say what the heck, like, well, you think it's worth one, I think it's worth 10, and the market will also decide on that. But it's not based around financial calculations. It's based around who can tell the story better or who can be the louder teller of the story on on social media or on certain channels, right? And I think Curve has decided just not to play that game, which part of the reason why I think people who get involved in the ecosystem understand what the product's doing, understand how it works, how it fits together. They tend to stick because they see the elegance of it and appreciate it from an engineering standpoint. Because you and I both have a software development background, and you start to appreciate, yeah, there's a lot
yeah,
here, and there's also a lot of thought that's gone into it, and it's very carefully constructed.
Yeah, that's the underrated force of Curve because it is really stellar engineering, in a
Yeah.
way. As an engineer, if you see this, you think, okay, this is like a different beast, basically. And
Yeah.
I'm attracted by this, because
Yeah.
it's not like it's as complicated as it has to be. It's not like over engineered, or it's like, yeah, that's how it should be. And if you think, I did think a lot about stable coins and how can you make stable coins also like in a maybe more alchemistic ways and these are funny things, but I could never implement this kind of money I have been thinking of basically. And if you look at the solutions, who are mostly Mitch is the guy who was like, yeah, he's like the wizard of this, it's like doing this.
Incredible.
So it's like the lead thinker of this, and he's able to implement this. And this is really, yeah, it's a big motivation for myself, to be part of this because it's not only thinking one thing is easy, you see, also if you look at stabilizing stable coins, if you say, if you look at the fiat, how we print like non-back curve USD, and this answer is not like not Mitch invented in a way, but it's like this is like the I think the best answer at this point of the problem basically. And I don't know, I'm not sure you can like iterate on this, but if you look at design space, there are limits on design space. At some point, design space is just not. Yeah, you
Mm.
can put a lot of energy in it, but it doesn't get any better. It's only a little bit, and nobody cares. And if you look at soft liquidation, how this works, for me, it's like, yeah, if you understand how it works, then it's like, okay, this is obviously a solution for a problem who exists like since a long time. And the solution itself, it's, the idea that you sell continuously, you sell part of the collateral to the backing token. So it's like, yeah, soft sell. It's not, I don't know if the idea is new, but who can implement this? So you need someone who can think it and implement. And Mitch is the guy who's able to do
Incredible. Yeah.
this. And
No,
this is
incredible.
not very common in how we say, if you look at innovation, it's mostly driven by people, yeah, who are at some point and are able to achieve things which other people can't. So,
Yeah.
and of course, you need the right timing and all other things, but it's like, so it's not so, yeah, it needs a lot of, it's not that you need to be a genius, this like goes this direction. It's not that you need to be genius, but you need like the right setting for your ideas. And basically, for which crypto or exchange or all this technology, it's like he fits his mindset or his way of thinking. So he can manifest in this technology. I get maybe in other times he would, yeah, it wouldn't be that beast or the project now. It has manifested itself because then he would have another life. But it's like the perfect combination. His mindset,
Sandbox.
how he thinks about money, or if you say he turns like upside down, this like yeah, it fits crypto in a way. And I don't know if there are many founds like him basically. So, and I'm quite, yeah.
Do you,
There's
maybe last question to be respectful of your time? Do you worry about key man risk with Mitch?
I'm not, because if you see, we what we are able with him is like iterate on the just chip something on top basically on the innovation and be like the first mover. And this is only one way to win for any product or market. So if you think, yeah, you have this kind of risk, then I guess there's so many. That's the beauty of having product market fit. If you have product market fit, then there are many ways you can like develop your products. And it's
Hmm.
only now it's very based on technology, but Curve could also like take different directions. So if he would have less engineering power, basically, or less like how we say like this kind of insight and
Defensibility.
bring it to the world, the engineering power Mitch has, or we have other very good engineers, of course, and some of them have other ideas who are also like valuable, maybe not in the direction he is like thinking, but in other directions. So it's not, I don't think it exists in the way. because like the
Hmm.
system itself is like independent of yeah, we are in this case we are like we are a real DAO. It's not that.
Yeah. Yeah, it's decentralized at that level.
Yeah, it's decentralized, and somebody would just or it would just change it basically. But it helps, of course, it helps.
Yeah. Yeah. I would love to meet Michael one day. I admire him from afar. What he's been able to accomplish, and also the talented people, yourself included, that he's been able to gather into the vortex that is Curve, right, and the ecosystem that's developed around Curve, the flywheel, Convex, Stake DAO, Frax, Clever, Aladdin DAO, these different abstractions on top of what
Yeah,
the liquidity
yeah.
center
I
that
guess
Curve
yeah,
offers.
you're also very open. People. Yeah, that should be like the composability of DeFi in a way. I think we keep that up. You can build on us, and we will try to help you basically. And I see, if you think how it's not about. I mean, from a culture standpoint, if you look at how Uniswap, how how they think their decks basically. Yeah, it's different. They make their own front end and take a cut in the fees as like a company. You can do this, and that's fine. But somehow, yeah, we think different. We think about we need very good partners also outside who try to multiply us basically, and I guess that yeah, that's much more collaborative basically. It's not about it's just a different way of thinking, I guess.
Well, I think there's also, again, I'll talk about this from like an attack vector, but Uniswap, based in the U.S. founders, they subject to SEC regulation. You have, Swiss stake, the holding company for the intellectual property of Curve. Michael's Russian, I think, in terms of a passport, lives in Switzerland, and I think
He's
that also. Go
like
ahead.
yeah, he's Australian, but he's like he grew up in Russia. Yeah.
Oh, okay. Apologies. All right. Yeah. So I mean, maybe there's different attack vectors there, being
Yeah,
Australian as opposed to the
okay,
U.S.
maybe
But
we are just more careless. I don't know, or more teaching. I don't know. Sometimes,
yeah,
I don't know. It's just yeah. If you talk about risk, I think Switzerland is a very good place. Basically, not for myself. Yeah, I'm Swiss. I'm stuck somewhere. I don't know. But it's a good place to innovate because we are not very scared of just. That's interesting about Switzerland. It's pretty conservative in a way. But the other way, government doesn't regulate everything with like fresh and new. It's just we look and see what's going to happen, then maybe we regulate.
hey, folks, thanks for listening. As you probably are aware, there was a complete internet and power outage here. The call got cut short, unfortunately. So Martin and I wrapped the podcast up offline. Just want to say, really enjoyed having him on. If you would like to follow him, learn more about what he's up to, go to cryptonative.ch. That's .ch for the Swiss TLD for the domain, or check him out on Twitter at Martin Krung, Krung. And also check out what Curve Finance is doing. That's curve.fi. Thanks for listening, and I'll see you on the next show.